Right, let's change gear a bit and get to Nicholas Poynton for the business news. Nicholas, well, the pandemic has taken a chunk out of Z Energy's half-year profit, has it?
Yes, the country's largest fuel retailer has reported a $58 million loss for the 6 months to September, and it really does stand in stark contrast to the $28 million profit it recorded for the same period last year. And this result, well, it just really reflects the harsh impact of that nationwide lockdown. It forced people to spend time at home, which means that they weren't in their cars driving, and because of that, they weren't buying petrol. The company has also incurred about $14 million in costs. That was because of lower expected refining margins, which led to a reduction in production. As a consequence, Z had to pay these fee floor payments to Refining NZ. The company does say it's on track to reduce its costs by nearly $50 million for the current financial year. They say they've already cut operating expenditure by about $22 million, with most of those cuts being made to marketing, customer offers and promotions, professional fees and third-party procurement. They've also benefited from the wage subsidy, for which they've received about $3.5 million. And I know that big companies taking the wage subsidy does seem to rankle large parts of the public, but I guess some listeners will maybe be a little bit happy to know that this company has cancelled both its employee bonuses as well as full-year dividends, and the company, they are expecting things to really pick up over the next 6 months. That's with borders closed, long summer ahead of us, we can probably expect to see more people getting on some big Kiwi summer road trips.
So, Nicholas, no secret, US election is well and truly underway. How are the markets responding?
Well, investors hoping for a decisive early read on the election will be dampened by the results early on, as they are appearing very, very close. The US dollar, it has gained against those currencies which would be most affected by a Trump victory. So a lot of this has been driven by the slim lead he's been holding in that battleground state of Florida. And the currencies to suffer there would be the Chinese yuan and the Mexican peso, as they would be, they'd be on the receiving end of 4 more years of aggressive Trumpian trade policy. Markets have been reliant in recent weeks on the prospect of a massive fiscal stimulus relief that would be on the back of a Biden victory that would help the economy recover from the worst effects of the pandemic there in the US. And such an outcome that would give a boost to share markets, not just in the US but also around the world. I would see it in our own share market as well. So the longer this drags on, the longer there is no indication of a clear victor, well, we can probably definitely expect to see some volatility in the markets and in the currency that could carry on for some time. And in that regard, some investors have been saying that any outcome that produces a clear victor, regardless of who wins, could actually help stabilise markets. So when we look at the impact of our own market, the NZX, well, it's closed up 0.5% to 70 points to 12,200. And the volatility, as I mentioned before, we would also see that a little bit in the dollar. It's been knocked around a bit today by both US election, those early results that have been coming in, as well as the latest job numbers. So it's at 66.6 US cents. It did get as high as 67.4. It's come back a little bit since then. Looking at the other currencies we measure our dollar against, it's at 93.5 Australian, 51.2 and 51.2 British pence.
Thanks, Nicholas. Nicholas Poynton with the business news for the day, joining us from our Wellington studio today.